Hello everyone, welcome back to the RationalInvestor.com's Weekend Frivolity. I won't start in earnest until I actually hear the YouTube video kick in. RationalInvestor.com's Weekend Frivolity. Alright, so it looks like we're live on YouTube. Not that many people on the show page just yet, but maybe we'll give that a few minutes to kick in. But good morning, everybody. It is Sunday, the 8th of September. Great to see a whole bunch of people in the lounge here this morning. We're welcoming with open arms new site members, new free trial people, new school students for this upcoming fall 2019 term. So site's very active this weekend. I see lots of people popping in and out and saying hello, and actually we might even have a bit of a friendly broader crypto market here for us over the next few weeks, but we'll get into that shortly. But probably the first thing I wanted to mention was, and we sort of kicked this around a couple weeks ago, we didn't really have that much lead-in time for everybody. But we for this upcoming fall term, we thought we'd do something kind for the community, and we created a raffle for a seat in the level 1 program for the fall term. We do it's supposed to be a quick 10-15 minute video. It seems to get on to about 15-20 minutes, but I try my best to summarize things very quickly. But we do a daily broadcast of sort of what TRI is seeing in the market. Through here, we've asked people to submit their names to be part of the raffle. And as well, last weekend's Broiler Chicken Show, I think we also mentioned it there. I did mention it a few times on Twitter, but Twitter's an interesting venue in itself. But today is raffle day, so a big part of what we want to do today, and actually you can see we created a nice random generator for the winner of the contest. You can see we have quite a few people enter the contest, so very pleased to see that. Good karma for the universe, and hopefully we can change somebody's life here for the better. Over the next few months. And actually, it's, just on a side note, we did have a raffle, I guess a couple years ago. The gentleman that won the raffle, his name was David. He went on to actually complete all 3 levels of the education program. And he's a very active participant in our options club, our TRI Secret Options Formula Club. That is really only open to people that are alumni on the site and that have gone through the derivatives trading, because I don't want the public trading derivatives. It's extremely dangerous. But it just goes to show that people they can win the contest, and they actually go on to complete the whole program, become like integral part of the site. So super stoked with that, and congratulations again, David. And been really beautiful to watch his evolution as a trader, and all of you guys. So I asked when we started this broadcast up when we should do the draw, and everybody said, "Oh, you should probably do it at the end." So, I know a lot of people probably tuning into YouTube and stuff just get to the damn draw. I want to know if I won. But you're gonna have to wait for it. And by all means, tune in later on. We'll be more than happy to make fully broadcast the winner of the contest. So. If you are interested in that, you're going to have to bear through Brian's sort of market commentary. But as a special treat, and I thought this would be kind of fun, teach patience right from the start. Wait, a nice comment, Colleen. I actually asked our level 1 instructor to come on the show with me today, and we'd kind of do it together. So Grim, I think you're on the call. Do you want to say hi to these good people?
Hey everybody, this is Grim.
There you are.
You'll hear my dulcet tones every week as we go through the course. Should you sign on to level 1? And yeah,
Sorry.
hope everyone's having a good day.
Awesome. Of course, I ruined that with a big cough in there. Sorry, sir. Grim, and Grim's been with us here at TRI. I think you started probably in like 2015 or so with us.
Well, I'm not sure of the exact year. It might have been 2016,
Okay.
but somewhere around there.
Long and short of it is Grim's gone through the entire education program, has really dedicated himself. Beautiful to watch his trading. He learned the process. He owns this process, and frankly speaking, I couldn't think of a better person to have guiding you through the group tutorials than the Wookiee himself. So, like I said, I thought it would be kind of a good thing for us to try and do it together here. As well, and I think we should give him a shout out. I don't know whether he wants to come on or not, but we used to have the mayor of Vienna, quarterback the videos and the daily briefs and stuff like that. But the mayor of Vienna went Hollywood on us, and now I think he actually is trying to get his doctorate in film studies at USC. So congratulations, Alex, and good luck. We're all rooting for you. But we now have the Duke of Albuquerque helping us get this stuff going on a daily basis, doing an excellent job driving the bus. And he's actually the one that put together the wheel and responded to everybody on the YouTube page and in Twitter and stuff, making them aware that they were added to the contest. So I want to give a big shout out to Kevin. I think he's done an excellent job. Filling Alex's deep boots, and very proud to work with this guy. Just an excellent gentleman. Kevin, do you want to say hi to these people?
Yeah, hi everybody. Thanks, Brian. I appreciate that too.
Yeah, just a stand-up person. Heisenberg?
Breaking Bad reference.
Oh, okay. Yeah, well, I suppose that's your neck of the woods, isn't it?
Everybody loves Albuquerque for Breaking Bad.
There you go. All in all, I'm so proud of this community. Julian and Sjord, my partners and principals in TRI, just bringing it on a daily basis. As you can kind of see from our dashboard, we're actually considering this kind of a developer cycle for TRI itself, and some of the tools that Sjord is working away on. So proud of him, really hard-working individual. We're taking advantage of this developer cycle just like all you crypto enthusiasts, and hopefully your favorite cryptocurrencies are taking advantage of the developer cycle just to get us all ready and prepared for the next bull wave for when it comes. We also at TRI, keep in mind, like I was a full service retail stock options commodities broker for years and years and years. So I'm very active in the stock market and commodities trading markets at the same time as we're sort of all waiting for crypto to clean itself up here. So the site is very much a multi-dimensional experience. And I think it's really important that we drive home this idea that what we do at TRI is we're actually teaching a profession here. I know there's a lot of people that come on Twitter and social media and YouTube and stuff just saying, I think, the price is going to go there. I think the price is going to go there. Or I think that this guy's an evil villain. And I think this guy is the real Satoshi, whatever. We don't really do that here. Frankly speaking, I know about trading. I know about human psychology. I know about trying to reduce anxiety through the process of risking your hard-earned money in the marketplace. That's my specialty. And I don't, ironically enough, I will give you my opinion through these videos. But what I found in my career is that people's opinions are just that. They're just their opinions. and at the end of the day, they're actually kind of worthless. It doesn't matter who's saying what. They're just their opinions. And what we really want to do at TRI, and our whole purpose of our education program, is to teach the process of actually coming to the market and speculating on a daily basis, and relieve the anxieties that probably a lot of you experience as you're like, oh, should I buy this? I don't know what's going to happen. That kind of stuff. It's heavily focused on working with trading plans. And, the process of building out that plan is a very intimate experience. No two traders are exactly alike. You better learn that now. You might follow a guy like Dav. I can tell you absolutely, Dav and I taught Dav, and I think he was an excellent student, but we are very, very different people with different risk tolerances, different outlooks on life. So as a default, our trading plans look extremely different. I'm a little concerned that I've heard some people say, oh, I'll just watch these free videos and, I don't need to bother taking the course. You need to understand that half of these free videos is just Brian spouting out rhetoric. What does he think? What's his opinion? But at the end of the day, that doesn't really mean a hell of a lot, even to someone like myself. I don't consider my opinion that valuable. It's just an opinion. What we have to do is we have to figure out what speaks to us in the marketplace. Again, that's a very individual process to go through that, to try and figure out what actually works for us and what we like and what we don't like, and then to articulate what's actually going to get us to act in the marketplace. And then the final piece to that, sadly, is, do you actually do what you say you're going to do? A huge part of, and Grim can probably speak to this when I stop talking. Who knows when that'll be. But a huge part of our education program is just simply going through and teaching you all of the tools that we use to try and hold ourselves to account. We teach you the tools of how to try and release your emotional anxiety, because keep in mind, your emotions will get you to do exactly the wrong thing at exactly the wrong time. That's what the market is designed to do. It's to get you to panic sell at the bottom, and it's to get you to FOMO buy at the top. That is the definition of capitalism, sadly. So I wanted to just start off, and this is a good dovetail to the sort of raffle today, how important having a really solid foundation for your participation in the market really is. I mean, it is critical. And the only way that we can really succeed at this game is we have to articulate what it is that gets us to act, and then actually track whether we do what we say we're going to do. And that's really the big sort of selling feature of the level 1 program, is to really focus you in to learn the process. Somebody even this morning was like, I think this is a good place to be. And all I said to them in the lounge this morning was, my job is to teach you the process. The process works. It is the way that professional money managers come to the market day in, day out, and just exercise their profession. But I can lead you, the old expression, I don't know whether you guys remember Ross Perot. They used to always make fun of him on Saturday Night Live, and they'd say, you can lead a horse to water, but you can't make him eat peanut butter. So I don't know whether you will actually believe me. And, it's kind of sad. There's a couple people on Twitter that even said, I took the education program. I didn't really pay too much attention. I just went and just loaded up through that 2017 bull market. And wow, did I ever learn on the other side of that, the whole concept of things like reload zones and 3 reasons for a trade and trading setups and stuff. And, sometimes people actually have to learn the hard way, which really sucks. And I won't say sometimes, actually most of the time, people have to learn the hard way. There are the occasional few that come to me and say, okay, I'm going to do this. They work closely with Grim. They log 20 paper trades, 21/10 account size trades, and they get this thing called the process. What I love about working with guys like Grim is he's like, 20 trades, I want you to do 100 paper trades before you risk your hard-earned money. And frankly speaking, the more the better. In my opinion, it's just, if there's any way to slow people down and learn the process of managing your money professionally, 100 paper trades, great. Let's knock it up to 100. But for those people that are really focused, like, I got to get this done in 3 months. I've got to learn this profession. I want to see 20 paper trades of a setup. Then I want to see 21 at 1/10 account size trades set up. That means you put your money away and learn the process. And then once you get to the point where you can look at those 20 paper trades, 21/10 account size trades, every single one of them, you followed the setup exactly correctly. You entered where you were supposed to. You either got stopped out where you were supposed to, or you took profits where you were supposed to, and rinse and repeat. You have a nice full journal. You're downloading all your emotions. You're learning. You're reviewing your journal on a weekly basis. You're doing things like mistake logs. You're tracking your behavior. You're tracking where you're screwing up. You're identifying your weaknesses and your strengths, and you're leveraging them. This is a hard work. And I think I'm not quite sure why I went off on this tangent, but that's the value of our education program, is to get you to be acting like a professional in the marketplace. Okay, that was a mouthful. All right, so I thought it was interesting. I read in the lounge this morning, somebody really liked how I took the Bitcoin chart just from totally scratch last week. And built out the chart, so it sort of gave us a roadmap of what to sort of look for. So I was actually really surprised. I try to take a day off a week. I mean, one day off, I think that's not asking too much. Somebody's calling me right now. That's kind of bad timing. So I thought for fun, and I was sort of going through, I just quickly looked at the market yesterday, and I was like, holy crap, I take a day off, and then all of a sudden all these goddamn setups all start coming in. And I was tweeting out something like Litecoin yesterday, and sort of this is the end product of that analysis process. But I thought it would be kind of fun today that we just maybe start with just a brand new clean chart. And let's throw up the old, what should we do? And we'll do a poll here. First one to answer wins. Should we do Litecoin or Ethereum? Who wants first? Oh, LTC. Josh got LTC in there. We got one vote for Ethereum, another vote for LTC. How about you guys over on YouTube? And they're going, hey, that's not fair. Oh, I got ETH, LTC. Well, why don't we do both? What the hell? Okay, so Nautilus coin. Where's that Brian Kelly guy, man? What a fucking crook. Oh, Jesus. And I gotta admit, everybody, no offense to crypto universe, but oh my God. I'm actually really disappointed in this space that it turns out that there are a hell of a lot more cabbage coin people out there in this space than there are respectable citizens, which really disappoints me, but it is what it is. But yeah, Nautilus coin, and nobody has ever held that son of a bitch to account. I mean, if people want to sue in this space, that Brian Kelly guy should be sued up the ass, man. It really pisses me off. And nobody holds the guy to account over that. I don't know. So don't get me started on Nautilus coin. Okay, so let's take a look at ETH. Let's pop on over maybe to Coinbase for clean. And let's start from scratch. What the heck do we have here? So, whoops, what the heck did I just do there? That was weird. Oh, there we go. So I always think it's a good idea to start your analysis process. Hey, Murat's here. Oh, by the way, Grim, I don't know whether you're aware. Yeah, Rizal, Brian Kelly from CNBC. He's the crook behind Nautilus coin. and nobody's held him to account. It's just such a piss off. But anyway, so I always think it's a good idea to always start at sort of the highest time frame. The only problem with working with sites like Coinbase is they just don't have that much data. I don't know whether, I definitely remember when ETH came out originally. It was a few years ago. But do we have one? I suppose Phoenix probably has a really long history. Let's see what we got here. Oh, same thing. I wonder if this is a function of TradingView. Stamp. All right. Let's take a look at that. I mean, the interesting thing is we've come so far that no, Stamp's even worse. Isn't that weird? I don't know why it's like that. A little disappointed, eh? Anyway, we'll use the data that we get. Yeah, Polo probably should be a good one, eh? Let's see what Polo... There! Polo's got some data. All right, at least now we go back into 2015 here. But you can see the lows are relatively the same. I mean, it's not a huge difference. But, I think the easiest way to start your analysis is to simply look at the highest time frame possible. And just start drawing some levels. So, first things first. And I'm a big fan of fibs, just simply because it's nothing more than just a statistical measure of price action. So in essence, this is 61.8% of that move. This is 78.6% of that move, etc. And as I used to always do in my Coinigy shows, and back before we had these insane blow-off tops, I'd always just say, just simply draw a fib. And if you did want to be a buyer, you just simply have to put yourself on and this is sort of, 3 reasons for a trade. We always want to start with trade location. Can you hold on a second? I think somebody's knocking at my door. I'll be right back.
Hey guys, I'm gonna fill some of the silence here. I didn't get a chance to interject, but definitely when Brian talks about what we designed level 1 to give you, right? At the end of the day, what we want you to have is a good selection of tools and a process by which you implement those tools. So certainly anyone who's been through level 1 should be able to look at the analysis that we do on the site or that other people do on other sites and see whether they agree with that analysis or not in an intelligent way, not just a gut feel of like, oh, I think that guy's being honest, but do I derive the same things from those charts? So yeah, that's hopefully what we're gonna get each one of you guys to. That's my goal as an instructor, is you leave the course with a good plan for how you're going to handle your trades and a good selection of tools to analyze charts with. One of which is the Fibonacci's that we're looking at here. So
Can you just lock the door when you're done?
Let's give it just a minute here.
Sorry about that, everyone. I heard Grim popped in there for a second and helped me out of there a little bit. Thank you, sir. I appreciate that.
Anytime.
You might hear some banging going on in the background. Somebody is working on my front door right now, so we'll see how that goes. Fingers crossed. Okay, so did you take anything further here, Graham, or
no? I just reiterated what you had said about what we want students to get out of level 1, and the specifics of like. At the end of level 1, I expect any level 1er to have a trading plan, have a selection of tools by which they can look at these analyses that we do and come to their own conclusions, right? Excellent. And see whether their conclusions agree with what they're seeing.
Yep, perfect. Well said. Because at the end of the day, remember everybody, we're not here to build robots. What we're here to do is we're here to educate you. the tools don't really change. I mean, the irony of it all is, yeah, our computers make our lives a heck of a lot easier. But ironically enough, some of the tools that we teach in this school are like over 100 years old, like point and figure charting goes back into the late 19th century. So we're not really reinventing the wheel here, but at the same time, too, like I said, we don't want robots. We want you to be able to come to your own conclusions and your own decisions. And of course, does it fit your trading plan? So well said, sir. I appreciate that. Okay, so, off of the weekly basis, we take a look at the range on Ethereum. You can see she was way up here through the Insano face rip. Really good lesson that if you just, put yourself on a plan and just simply say, I'm not allowed to buy unless we are at or below reload zones. I think on balance, little old ladies and stuff, well, they've been, yes, you've been underwater. But interesting, and we've often talked about this in the past. Look how the market is trying to set up a bottom off of good old 78.6 here. I really don't think that that's an accident. For those people that can actually hunt W's, and it might be easier if I just change this to a line chart. Hopefully everybody can see here. You don't really have any reason to buy until we actually get down here where you actually start seeing W's start to come in on price action. So really, really good anecdote, not only of trade location tools, but also market structure, that at least at this point now, we can start getting some confidence that, at least there's some demand here. And really quite literally, think of M's and W's as nothing more than just battles in the marketplace between supply and demand, where if price is pushing higher, then that means demand overwhelms supply. And then conversely, if price is pushing lower, then that means supply is overwhelming demand. When we have the M situation, all it's really saying is that there is more supply than demand and price is getting pushed down. And then conversely, when we do finally actually W, it just literally means that demand is overwhelming supply. Price gets bid up and supply comes out and it dumps price back down. We get back down to these levels and supply of Ethereum in this case seems to dry up and demand overwhelms supply and we bust through the middle part of the W. So it's encouraging to see, first signs of light, if you will, in this space. And of course, hopefully all of you remember this catalyst, in my opinion, was nothing more than just sort of the conversation change through this window from, where is Vitalik and all that, and our, ICO insanity and massive supply just overwhelming the market, to in this market, we actually started changing the conversation to Litecoin is happening. There's going to be a reduced payout, which means that, the actual cost to validate the network and all that kind of stuff, that it just changed the conversation. And I think it led to this sort of, spring, summer little crypto rally that we've enjoyed here. Some names, of course, have done much, much better. Things like Bitcoin. Litecoin itself, I think, went up about 4 or 5-fold. Ethereum itself hasn't really participated in my eyes, and I actually feel like it's actually underperformed here. A little disappointed in that. We can, let's see, where should I start? If I'm going to come up with price objectives for things like counter trend rallies, I'm actually want to now start, because we do have signs of W, so that's a good sign. I actually want to take my fib tool and I want to go the other direction. And ironically enough, I think you can actually make the argument that at some point, if Ethereum does survive, that we could actually make the argument. Remember, the original M top actually comes in through this event up top here, right? So you can see up, down, up, fail. So this is where supply ultimately started to overwhelm demand. And you could make the argument that, institutional players, they sell up markets, they buy down markets. So, institutional players saw this and then they saw the M and they're like, all right, let's go and short this thing into the ground. And if there was a specific area that I think that institutions would want to get short, it's off of this original M top. And you notice that the reload zones, this was the reload buy zone, green box, red zone, sell zone, red box. Notice how that just basically corresponds with that original M top. So ironically enough, if I was an institutional player and I really wanted to get short Ethereum, I actually want to get short from up here around $1,000. I know that sounds crazy, but really that's what I'm thinking. And the easiest illustration of that is just go look at the corn, and you can see how the corn basically basically the same logic. If I want to be hunting buy levels, well, green boxes are buy levels. So it makes sense why the market ultimately turned through here. And then if we do our fibs going the other direction, and actually I think we did this off of a candle. What a surprise. Remember our original M top there. If I change that back to that line, right, there's that M. And notice that price zipped up into that level. Didn't stay there too long, right? But in essence, it zipped up into that level. So if I wanted to be an institutional player and I wanted to get short Bitcoins, this is the area where I want to try and get short off of that original M top. So I guess the point that I'm trying to make is, frankly speaking, I'm a little disappointed in Ethereum. In that you can clearly see it has not participated at all in this bull. And I think one can actually make the argument that we ultimately decide whether a market is still in a bear or still in a bull by the resolution of 38.2 fibs. And that's still like way up here. So this to me says that Ethereum's still trying to find its bottom. I do like the fact that the market rallied back up to 78.6 here and then paused. And in essence, if we can get an acceptance back above this level, then that to me says that's a pretty powerful reversal. But that's going to take some work. There's no doubt about it. That's like 300 bananas for an Ethereum. We're sitting at about 180 right now. So there's still a lot of work to be done here on the weekly chart. I think you could make an argument. So actually, why don't we... I think we'll leave the weekly analysis at that. And, I actually like the idea of you going through sort of like a checklist. And one of your check boxes might be what is the weekly trend. And sadly, as it stands right now, because 38-point market's still below 38.2s, we really haven't put in a solid weekly W here yet. I'm thinking that the trend is probably still to the downside. We do use cute little tools. One way to try and help you see this, but I think these tools are a little bit fast, but let's see what we have here. I like to follow the 30-period simple moving average and the 13-period exponential moving average to sort of give me a snapshot of trend. And you can see they turned bullishly back here. They turned bearish up here. They did turn back bullishly here, and you can see we're sort of, oh boy, are we going to turn over here? So I think that the moving averages caught this W down here, and that rally was sort of that end result of that. I'm a little worried that we're seeing a lot of crypto names slowly roll over and might go back into the bear here. So just be cognizant of that. And like I said before, I think when I look at this, 78.6 is, and I like to call it the line in the sand. And I like that as a level. If we can close on a weekly basis above this 300, 310 area, then I think Ethereum's back in business. So it's still got some work to do. Now, if we zoom in on, say, like the daily chart, there's our spring and summer 2019 rally. There is that line in the sand. If we start now doing fibs going this direction, we can make the argument off the daily basis that we're starting to sort of we're in the cleanup process of this big bull run. We are down into reload zones. If we use our simple moving averages, now this is off a daily chart, so you're going to get a lot of back and forth here. But you can see the moving averages turn bear, and if we change this to a line chart, hopefully you can see the big M. Up, down, up, fail, and on that failure you can see the moving averages cross bearishly here. So it really shouldn't surprise us. First and foremost, you're thinking about being a buyer of Ethereum. Is up here at or below reload zones? No. So you got to cool your jets anyways. Market stab down into mountain man level. We often see this happen, and a guy I used to trade with in the crude pits, he was like a day trader. So this is a classic sort of mountain man trade. Hit that 61.8 on a check of the moving averages. Probably if we did volume profile and stuff like that on there, he'd be selling half of the position, move his stop to scratch on the remaining, and who knows, maybe the market just turns and heads right back up. In this particular case, you can see lots of back and forth, and then boom, he gets stopped out on his remaining position. He already made money on his sort of check of the mean here and moving averages on half his position, so he doesn't really care too much if the other half gets blown out at scratch. Next bus in 10 minutes. So with that said, I think that, off the daily basis, we're still sort of working our way lower, looking for those W's. Can I see W's? Can I see W's? And as I'd said to start off today's broadcast, I took yesterday off. It was my day off. And then I loaded up the charts, and lo and behold, here come a whole bunch of W's. And I'm like, oh, man, on my day off of all days. I don't know whether I can get too excited about Ethereum on the bull side here. If we think about that higher time frame, that weekly chart, right, there is our weekly W level, right? You can see down, back up against that level, back down, making higher lows consistently, and then breaking out. What's also really cool about this too is this is what they call a Wyckoff check, where the market works its way back down to the original breakout level, and breakout level. Even puts in a little M here, and this, I think, is the real battle zone, where we found out who's really driving the bus here. This could have very easily M'd out and just worked its way right back down to the bottom, but it came back down to these original breakout levels, put in this very tight little W, and then just took off. So really cool analogy. And remember, at the start of this broadcast, I start off by saying, what is a price chart? And ironically enough, actually, an old boss that I used to work with, this was his whole sort of approach to the market. What does a price chart actually tell you? And this is one of the components of our level 2 program, horizontal support and resistance. But in essence, a price chart tells you nothing more than where supply overwhelmed demand and vice versa. So clearly here, this is a great sort of very graphic illustration of that battle between supply and demand, where basically demand overwhelms supply and up goes price. So we're at an interesting level here. I would have preferred to see Ethereum come right back and check this bottom right in here, but the market will do anything it wants. Also a little suspicious about this too, this little W here, in that where are the buyers? The volume here seems to be trailing off. And that's not really the hallmark of a breakout. Like a breakout, we want to see just a whole flood of buyers all piling in at the same time. Give us these big. Notice on this breakout here, notice how the volume, the green bars, just started ramping up big time here. We might be in one of these kind of transition windows right here. But ideally, what I'd love to see is we teach a concept in the school called volume impetus, and really all that means is I just want to see who's sort of driving the bus here. I want to see if the bulls are driving the bus. I want to see bigger green bars here, right, and show me higher highs and higher lows. If the bear's driving the bus, then I want to see higher red bars as well. And when I look at this, what it says to me is that everybody's just falling asleep. I see lower red bars. I see lower green bars. Everybody's just gone to sleep. So really interesting that the market tried to break out here, especially on a Saturday, on very, very light volumes. A little bit suspicious. What else can we say here? If we start looking at some indicators, in the level 1 program we teach some very basic tools that I've used over the years to try and help me sort of see internal strength and weakness. In the level 1 program I teach you sort of my overbought, oversold indicator, which is a heavily modified Williams percentage R. And when this moving average actually gets into the oversold zone, you can see that it happened very briefly right there. You'll see on the left-hand side of the screen the Williams percentage R numbers. When this moving average, this yellow number, gets below minus 80, I consider that oversold. You can see how we dipped. We got to a minus 81 reading there, and we got a little bit of a rally out of that. So same sort of thing here. We got down to where are we here? Minus 80 right there. So we're starting to get sort of messages that this market's oversold. I also like to follow the MACD histogram. I think it's a really good sort of visual demonstration of that raw oomph, that raw push in the market. And interestingly enough, on the MACD histogram, we actually have signs of divergence here, where you can actually see that MACD histogram is making higher lows, but price itself was making lower lows. So actually, this market's actually a little bit stronger internally, price-wise, than what price itself would lead you to believe. But then, the final piece to that we teach you in the level 1 program is this concept of, they say volume leads price. And I like to use the on balance volume oscillator to sort of graphically display who's sort of driving the bus. Remember, I had talked about this great check right here, beautiful little double bottom, higher highs and higher lows, and look how the OBV fought, put in a little W here, and then just went absolutely ballistic to the upside on all of these big green chunky bars. So what I'd really like to see is, just show me some signs of higher lows and higher highs out of these green bars. You can see we got a really, really low print there. About a week or so ago. You can see the OBV is just drifting lower here. So I'm not really getting the best sort of volume confirmation that this market has officially turned just yet. That's a little bit concerning for me. I would prefer to have seen that actually it's buyers overwhelming sellers that are driving this rally. So that's a little bit of a concern to me. I do like to follow sort of multiple volume studies. This is the OBV study with those volume bars. You can see on Bitcoin 2, we've been humming and hawing about what we're going to do here against long-term trend lines. The volume here isn't very impressive either, and this is actually a MACD histogram of the actual volume itself. So I want to see that raw oomph, the push. And right now, there's no push at all. If we pull up that ETH chart, give you sort of a what was it? It was off of Polo that we did that, right? You can see here the actual directional push. This is an RSI of the OBV. It's actually pointing lower, and it hasn't really given a oversold reading here. You can see lower highs and lower lows defines a bear. And again, if I draw just simple trend lines off of this MACD histogram of the volume, I'm not really getting any clear directional bias. What we really want to see, if we're bulls, is we want to see higher lows and higher highs and nice little breakouts to sort of tell us, all right, this thing's ready to rock and roll. You can see it did it through here. That breakout led to an absolutely beautiful rally. So volume's missing on this, and that's a little bit bothersome for me. Now, in the tweet that I put out yesterday, I was like, well, a trader's got to trade. And one setup that I really like to use, that I've used forever and ever and ever, is what we call it now on the site, the El Tangonator. But in essence, it's trade location coupled with indicator confirmation, signs of divergence with the oscillator being oversold. And here you can see on Litecoin, we do actually have the makings of a W here on OBV. So that's the one thing that I'm missing out of ETH that's kind of bumming me out here. But at the same time, too, if we actually think about what's going on in ETH land, I mean, when was the last time we actually heard from Mr. Vitalik? Has anybody actually heard him publicly speak or anything lately? I don't know. I haven't really heard anything. So I'm a little bit skeptical. But having said that, there is a W in price. We are in a reload zone. We do have a confirmed MACD price momentum divergence. Willie was technically stupid here. So we can make the argument that the market was oversold. So put it all together, I really wouldn't have a problem if a trader said, look, Brian, put my opinions away. I've got location. I've got my indicator confirmation. I like to use price momentum divergences. And I finally got my structure, and I'm ready to go. I really don't have a problem with traders taking that. So in essence, this W here now defines your price risk. I'm a little concerned. I don't know whether this W is actually fired here yet or not. You can clearly see this doji bar here. It was painted on two sides by a big up candle and then a big down candle. This actually makes what's called a fractal in the marketplace. And if we lose the lows of this third bar, that's actually a bit of a sell signal. Now it's interesting that just shortly following that, we had a lower candle, then a lower low, then a higher low. So in essence, these three bars actually make a fractal going the other direction. So there is like literally a war going on here right now. And the easiest way for the public to just sort of make life really easy for you is let these warring factions fight it out here. So somebody on YouTube says, last I heard of Vitalik, he said negative things about ETH. Yeah, so there you go. That doesn't help the situation. If I draw, just remember the supply and demand dynamics. If I just simply draw a line off of that doji bar peak, that's sort of really good illustration. Demand was very strong, overwhelming supply. We got up into this level, and then all of a sudden supply said, oh, you want Ethereum? Here we go. Merry Christmas. And supply overwhelmed demand. I think you can make the argument we came back down against these lows. Supply dried up. There weren't any sort of motivated new sellers. The market turned back up. Demand overwhelmed supply. So here we are, pressing up against this supply zone right here. And notice this high on Poloniex here, just so happens to be 186.38 and change. And today's high is what did I say? 186. I hope I said 186. 186.38, and today's high 185.93. So I think you can make the argument that the W, and hopefully everybody can see this W, right? Down, up, down, breakout. This W is still very much in the process of forming. And it has not confirmed here yet. So really important, if anything, leaving this video, and if people watch this in the coming days, you actually have a mark here to follow. And traders would just simply say, look, if we can accept above this 186.38, I said, 186.38, then that is very much visual demonstration of demand overwhelming supply at a key pivot level, and a W that's formed, that's confirmed. And the good part about W's is it gives you a framework to work within. If I just blindly buy, say, I don't know, I'm just going to buy right here. Okay, so if I buy right here, where am I risking to? Do I have to just risk to zero? I'm a little old lady. I don't know whether a lot of you are little old ladies. I think we learned the hard way that a lot of you aren't little old ladies, that you have an uncle point where you're like, man, I can't take this anymore. So where do you risk to? Do you risk to the bottom of the candle? Oh, boom, you just got stopped out. Do you risk to the bottom of the next candle? Do you risk to here? Wow, you got booted out really quickly. The whole point of W's and this idea of working with market structure is at least it gives you a framework so that you can say, okay, well, I clearly have demonstrated, I have anecdotal evidence in the marketplace. Demand overwhelms supply right here. Supply overwhelmed demand right here. And then vice versa. So if demand is overwhelming supply here, and we can punch through the supply zone, then what that really means is that we might actually have the makings of a new uptrend, where demand is overwhelming supply. Demand is overwhelming supply. And ideally what we want to see in a nice bull market is that demand just continues to overwhelm supply. Higher highs and higher lows defines a bull market, yada, yada, yada. So the point that I'm trying to get to here is that when we're risking our hard-earned money in the marketplace, we want to find these war zones where there is direct anecdotal evidence. Yeah, I know, but it's the only one that had the data going way back, Raphael. I could go look at a different one, but we started off looking at the weekly charts. People are already making fun of me looking at Polo here. But the point here is, and hopefully and this is the one thing that I don't like about crypto, is that it's very schizophrenic from one market to another market. I'm just using this chart as an illustration. It could be different on other markets. But the point I'm trying to make here is W's are universal. And what the W does is, if I say, look, I can see clear visual demonstration of where supply overwhelmed demand. And if we can punch through there, then that means that something's changed in the supply-demand dynamic. And I have levels that I can work with where I know that demand stepped in and overwhelmed supply, and I can risk against those levels. And literally what I want to do as a trader is I want to let the big boys that actually did this heavy lifting to stop the bear and turn it back to bull, stop the bear, turn it back into bull, I want to let them defend my trade. And in essence, I'm going to go in here off of this 186, and let's call it maybe 186.40 or something, put a buy on stop order. And now I've got a clear battle zone where I know that the bulls beat the bears, and I've got a pretty good statistical shot that these lows are going to be defended. Nothing, of course, in the marketplace is guaranteed. Nothing, right? Statistically, this works, W's work a good 60 to 70% of the time. Now, 60 to 70%, that's a number I can work with. And, as Grim was telling you, building out our trading plans, the whole purpose of the Level 1 education program is to get you to stop needing to be right 100% of the time, because you will never be right 100% of the time. Get used to it. You will always have losers. It is just the way of the market. The key here is, of course, we want to make sure that when we are right, we get paid substantially more than when we're wrong. So how do we sort of figure out whether this is really a risk worth taking? We'll reset our chart, and we'll go back to our fib study, but we're going to cheat a little bit here. We're going to use the fib study, but we're actually going to do a WD-GAN study using this. And this is what we affectionately call the 50% rule. And Mr. Gann basically says that markets like to do 50% retracements of whatever their previous ranges are. So if I use 50% of this range, right, this low that we just printed here, 162, 163, back up to the highs here, 384, gives us a nice 50% rule of 273. That's a realistic target to use, right? It's not asking for new highs. It's not even suggesting that we're in a bull market. We're still really stuck in a trading range. Now, if I take the amount of risk that I'm going to have to stomach by trading this W, and I compare that to the potential reward, if I just simply set a price target of that 50% rule, the key to winning at this game over the long run, like I said before, it's not being right 100% of the time, because I absolutely guarantee you, no one here will be right 100% of the time. I can, which is like saying I'm going to be right 100% of the time about the fact that you're not going to be right 100% of the time. I suppose there's one person out there that's going to screw up the statistics, but hopefully you get my message here. But the point here is, if I do decide to step into the market and I've got a battle zone to work with, and I've got a realistic target to work with, notice that if I'm right, I get paid $3.51, versus if I'm wrong, I lose $1. That's the way you play this game. You got to make sure that your winners are bigger than your losers. And ironically enough, when I was trading on prop firm, they used to say this day in, day out. The simple way to win at this game is just make sure that your average winner is bigger than your average loser. It's very difficult to lose money if you do that. But at the same time, too, it's extremely difficult, and this is getting to sort of learning the process. Some people are like, I could just watch his free videos and, I'll get this down. This is a hard skill to master. That's why Grim wants you to do 100 paper trades of this kind of thinking. This is changing the entire way you look at capitalism. In essence, all we're doing is we're looking for statistical windows. I might make the argument that a lot of people in the public look to technical analysts to try and tell them the future. And that's wrong. That's actually, it's dangerous because, like I said, nobody's right 100% of the time, yada, yada, yada. What a good technician does is they just simply identify statistical anomalies like this, where I've got a better than a coin toss odds because I've got things like internal momentum confirmation. I've got half decent trade location. I've got market structure that identifies where demand is overwhelming supply. And I've got realistic price objectives. And as somebody in the lounge just pointed out, that gee whiz, didn't we talk just a few minutes ago that if I was an institutional player and I wanted to short, I'm going to try and get short from where the original market failed. And then if we draw things like reload zones, you notice that, gee whiz, that statistical failure is right in that original M. So if I just use Mr. Gann's simple 50% rule to try and help me, I'm not going to be greedy. I'm not going to look for those, because keep in mind, those are reload short zones. They're not take profit zones. if I'm not greedy, I'm just operating off of what should naturally happen in the market, i.e. 50% retracements, I got a pretty good shot here that I can get my fill here with before this market decides to go and break these bottoms. So really, actually, this has actually been a really good exercise in going through how you actually vet setups. Now, the interesting thing about this, the one thing that's missing from this trade is I don't have the buyers actually showing up here. And that's a little bit bothersome for me. I do really like to have volume confirmation on these breakouts. So, maybe we get just a big swath of buyers that come in here. If we got a nice big green bar here and we broke out through all these highs, my hunch is that does punch the price up through this high, 186.38, and away we go. But that hasn't come in yet. And if anything, this is a really good one where you just throw it on your screen, watch what happens. If you're not familiar with the process, then my suggestion is you paper trade this. Say, all right, I'll listen to this Beamish guy this once. I will paper trade, and you can even just make a mental note. If I see, in futures trading, it's really easy. The DOM makes it super, super easy. I can just basically place a buy on stop order at 186.40 or maybe 186.44, something like that. And in essence, if the market trades up through this 38 level, then ding, 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 you get your fill at 40, 41, 42, 44, and you are in the trade. In crypto, it's a little bit more difficult to do that. I do, and it's actually cool because in the lounge here, as I'm walking through this, all the people that are old TRI dogs, Kevin's right there like, oh, I want to see a candle body close, and I want to see like Wyckoff checks, and that's awesome. That's great. But it just speaks to, if anything, all these people, Colleen's in here going, yeah, look at the 50% level lines up perfectly with value high. So, it just goes to show that, like, we teach over 36 different concepts in our education program on how you can look at the market and come up with decisions to actually make you act. And I love that because there's no one way to trade. That's why our education program has like 36 modules, and we're just scratching the surface. We could sit here for the next. In fact, a lot of the level 3ers that are graduating right now. Okay, when's level 4? When are you going to do Bollinger Bands? When are you going to do market symmetry? When are we going to get that RSI module? When are you going to do option spreads? It just goes on and on and on and on. So there's no one right way to trade, or like, let's say, one indicator or one tool. If anything, what I would suggest is what I have to do as an instructor is I have to just simply set the table for you. Say, look, there's your salad fork, there's your steak knife, there's your soup spoon, there's the wine glass, there's the water glass, there's the soup bowl, there's your entree, there's your salad bowl, whatever. And you sit down at the table, you try all the different tools out, and you're like, I like to eat my steak with a shrimp fork. It's just who I am. It works. I like it. It's me. But the problem here is I can't force you to trade one way. And actually, a really cool video that I've been sending out to people recently, and I even included it. And anybody who's watching the Broiler Chickens who just jumped on and is like in the level 1 program or whatever, before the school program gets started in earnest, go and bury yourself in the library. And specifically third-party instructional videos. These are great little tidbits. And one that I just recently added, Jack Schweiger, big fan of him. All level 1ers, I highly recommend that you go and read his books, the Market Wizard series. I'll even post this on the, I think I even did post this on one of the free YouTube shows recently. I mean, it's a must-watch. And Mr. Schweiger even goes through where he has dinner with a fundamentalist, and a fundamentalist says, "I've never met a technician who made money." And he goes through all the reasons why technical analysis doesn't work. And then in the next sentence, he says, "And then I went and had a dinner with a technician." And the funny story he says is they were sitting there eating steak at like some steakhouse, and the guy's like carving up his steak, and all of a sudden his knife slips out of his hand. It goes twirling in the air, and it goes straight down and lands on his shoe. And it literally sticks right in his shoe. And Schwager goes, "Well, why didn't you move your foot?" And he goes, "Well, I'm a good fundamentalist. I thought it was going to go back up." That's a funny, most of you on YouTube are going, "That's a joke. I don't get it." But for an old market participant like me, that's a hilarious joke. But anyway, the point being that even Jack himself here says that there's no one right way to trade. Some people are fundamentalists, some people are technicians, some people like price oscillators, some people like volume oscillators. But the point that I would just make here, getting back to our story, is, especially looking at the volume, that's the one thing that's missing from this equation that would lead me to believe that, okay, we're ready to rock and roll. So, a potential setup is just sitting there. And, I think this is a really interesting anecdote of sort of the state of crypto right now. I'm not, totally convinced, and especially somebody even said that Mr. Vitalik is nowhere to be found. I'm a little skeptical. I actually wanted to see further price appreciation out of Ethereum, but there's nothing driving the story here, and it just kind of drives me crazy. Now, having said that, if this W does fire and I have El Tanguinator in my trading plan, I got to take the trade. I don't really have any choice. And that's the difference between a technician and somebody like a professional who's following their trading plan, and just some, especially like CNBC talking heads, people in the media, where they're just spouting opinion. The technician, ironically enough, has to look at this and go, I don't know what the fuck's going to happen. I really don't know. But I vetted my setup. This El Tanguinator, I've been trading this damn setup for, 20, 30 years. When W's come in reloads. I know, I'm swearing like a sailor. My apologies, ma'am. Our resident little old lady is not happy with my F-bombs. But the point here is, excuse Brian's potty mouth, a good technician actually, if they're interviewed and somebody says, "What do you think's going to happen?" Ironically enough, a really good technician goes, "I don't know. I mean, all I'm going to say is, look, I've got a setup that's come in here. I got to take the setup and just live with the results." And I can absolutely tell you, every single one of you, when on YouTube, and everybody, of course, on the site knows this, I did my absolute best trading as a prop trader when I put my opinion away. I identified a trending market state, and I just took every goddamn bought long setup that I was handed every single day, day in, day out. I'm in a trending market. This thing's moving higher. I have to take every damn setup that comes in and just live with the results. And I mean, it was just staggering, the trading results. In fact, at the end of the day, sometimes I'd look at it and go, man, I can't believe what I'm doing here. So, but the key there is put your opinions away. They're worthless. They're meaningless. The only thing that really matters at the end of the day are your setups, and how good are you at actually following your setups. Now, in a bit of a contrast, I sort of quizzed everybody and sort of, gave you both. Let's do the Litecoin chart. And we'll do Coinbase because we don't want to be considered stuck in 2015. But we'll just basically apply the same logic. If we start off at the weekly chart, Now, like I said, this is the one reason why I don't like using these sites is we just don't have that much data here. But if we go, excuse me, go to reload zones. Hopefully, at the very least, everybody leaves these free video shows just simply saying, okay, I will not buy unless we are at or below reload zones. In this particular case, you can see we did go much further down. Is this a function of Coinbase's limited data? I don't know. I think also, too, if we change this to a line chart, oh boy, so that's probably where, if the institutions wanted to get short and they could get short, that's probably where they're going to be hunting. What do you think the odds are if we did a fib going from these lows back up to these highs? We're going to see that reload short zone actually lines up with that level. My hunch is probably pretty good. Yep, there it is. You can see how that reload zone is just parked right up there. So ironically enough, this is just like the Ethereum. This is another good example that if I wanted to actually short Litecoin, that I think, this key high and that key low, that's probably the area that I'd really like to get short from. And a lot of this back and forth, I think, is just purely technical within a price range. Right? What do you think the odds are that this was about a 50% retracement? Probably pretty good. Nope, didn't even get there. So I actually think based on this, we could even work our way even a bit higher here, just to validate that 50% level. Interesting how when we did the study off of Ethereum, we couldn't even get back above 38.2. So let's see if we even got above 38.2. Ah, hello. So you can see that Litecoin right now is basically just asking itself, am I still a bull? Or actually, am I still a bear, I should say? Or have I actually transitioned into a bull? And a gentleman that I used to work with down in the prop firm days, CME Floor, NYMEX, all that, he would just simply say, Mr. Burchett, he would just simply say, look, you can't even decide whether this bear market is done until this 38.2 has been resolved. So I think that as it stands right at present off of this weekly chart, Litecoin is still asking itself, am I still a bear? Or have I transitioned back into actually a ranging market state? If we go down to the dailies now, right, so there is that 38.2 higher time frame level. Notice that this is basically one directional, yes, we did have W's, but they're not the prettiest of W's, I'll tell you that much. This almost looks like it's just a one-way market, which in itself is a little bit disturbing. But if we come up here and do our fib back against the lows, and we do reload zones going the other direction. Oh, hello. Interesting level we've come into here. Okay, so this was the higher time frame reload zone. Counter trend rally ran into a stiff resistance at 38.2s. As I'd said a moment ago, this feels very one directional. So actually I do like this sort of, we're filling out this. Remember, if this really is a bull, what we really want to see over longer time frame is we want to see a nice weekly W, right, to break us out. So I think, Litecoin is going through the process of trying to find out whether it's actually bottomed here yet or not. Off of the dailies, the fact that we have come down into reload zones again, geez, it's weird. I look at these charts and I go, okay, well maybe we got something, but I don't know. Interesting. Colleen made reference to volume profile here just a moment ago. When I look at the profile, I'm a little bit concerned that this highlighted area is what's called value. And if we just move this fib study over, you can see that this shaded area here, this is what we call outside of value. We rallied up and out of value here, but notice we came screaming back down, thump, right, back into value. And then the market went through the process of asking, are we still in value, or are we maybe have we accepted above value? If we've accepted above value, then these levels should hold and we should have turned back up. But you can clearly see big fat M here, right? Up, down, up, see you later. That to me says that we've accepted back into value. So a little bit problematic for the bulls there. If we go AB, considering that's sort of like one move, then we go CD and project that one move thinking harmonically. Well, that actually suggests the price probably wants to come down into this area. And we have a rule. I've noticed, though, that when you don't have anything on the other side of value, sometimes this gets a little skewed. But our general rule is if we accept back into value, then 80% of the time we have to come down and test the other end of value. So that's a little bit bothersome. And also, too, this big node is what we call the POC, or point of control. So, I don't think it should surprise us that this is down here where demand overwhelms supply. Right, and we really had some great battles in here, and then finally the breakout. The people that put the bottom in the market, they took their shots through here and loaded up. So this is actually where most of the people are long Litecoin. And also, too, remember we talked about anticipation of Litecoin happening. It was a heck of a rally, and I can tell you there's a lot of TRI people that did very, very well off of this rally. We had a TRI big sort of global meetup in late July, beginning of August there. And quite a few people actually paid for their trips to Vancouver with the profits from this trade. So congratulations to all you who did so. But the point of the matter here is, if we were going to actually look at this chart and say, okay, where is sort of the vested interest? Where most people are long and they don't really want to see the price go lower? Well, that's basically the POC here. So that's a little bit bothersome. All right? And if anything, I'm sort of painting both bull and bear scenario here. If we do things like 50% rules going back up top, where does that take us? Interestingly enough, when we do 50% rule, gee whiz, what a coincidence. You can see that the 50% rule is going to be nothing more than a test of value high again, and really a test of that M that I just painted there a few minutes ago. And there's an old sort of saying in the marketplace that wicks and tails like to be eaten. And I might argue if this thing does a double bottom and it starts to rock and roll and we enjoy a nice rally here, where are we likely to actually see where maybe supply might start overwhelming demand? Keep in mind that a wick is nothing more than a whole bunch of people were bullish. At one price, this candle was a big green candle all the way up top there. And then all of a sudden, out of nowhere, supply overwhelmed demand and the price just collapsed. So what that means is there's a whole bunch of trapped bulls in this wick. And they would love nothing more than just get me out. They're sitting on horrendous losses right now. They might be like sleeping on the couch kind of thing. Maybe they risked the family's Christmas money or vacation money or whatever on this trade. They're sleeping on the couch of the doghouse, and they're just like, I don't care. Please just get back here. Get back to where I bought this. I can walk away from this unscathed. And I can stop sleeping on the couch. My wife will talk to me again, or my husband, depending on the case may be. So we can clearly see there is a whole bunch of supply just sitting here waiting for us right up. Do you spell supply with 2 P's? Never remember. Anyway, there's a whole bunch of supply just sitting here waiting. And what a coincidence. There's good old 50% rule. And, what we might end up doing here is big rally up, then come back down, swim around, and then maybe down the road we actually break out higher. Who knows? But I think you can make the argument that a 50% counter trend rally here isn't totally out of the question. Is this a new rip-roaring bull market? I think we're probably a little bit early for that. And if anything, what I would say is, I'd sort of said it earlier about Ethereum. Traders got to trade. We do have mountain man level. We do know that there are institutional players that will step in off of this level. You can clearly see there's a hell of a battle. Remember, think supply and demand and all that kind of conversation. There is a hell of a battle going on here, right off of that level. Off of that level. And then now off of that level. I mean, this is a war going on here. So again, remember, we have no idea what the hell's going to happen in the market. But, we're starting to build anecdotal reasons for justifying us taking a risk. We have trade location, green boxes, cannot buy unless we are at or below reload zones. We then go down to our indicators and we see, holy moly, this is definitely an oversold market. And actually, when I built this indicator, the whole purpose of this indicator was to do nothing more than just highlight overbought and oversold markets. I happen to overlay RSI on here because of just a space concerns. But the point here is that, and I sort of demonstrated this earlier, when I can get a reading on my moving average of my modified Williams percentage R, and it is below minus 80 here, that's telling me the market is oversold. It's what I like to call stupid, which is kind of silly, but it's a fun way to remember. In essence, it's probably not a good idea to be a seller of this asset down here. And as a broker, guess when my phone would be ringing off the hook with everybody panicking and wanting to dump, their Litecoins. It would be right through this window here. So that's why I affectionately call this state stupid. Where, usually it's the public ringing off the hook. And, when the indicator gets overbought here or reading above minus 20, this is what I would consider stupid. And in essence, what it tells me is that expect your phone to start ringing off the hook as the public comes in here and wants to FOMO buy, right? Public usually buys tops, and of course that was horrific timing, and down she goes. So the fact that the market is stupidly oversold here, I think it's a positive. Now, it's not enough of a reason to justify taking the trade on its own. That's super important. And I actually, I won't go into that story. We'll just leave it at that. It's not a reason enough to justify taking a trade. But if I go and I look at my raw oomph or my push indicator, that's my MACD histogram, you'll notice that, yes, price was making lower lows, just like we showed you on Ethereum. But the indicator itself was not making lower lows. It was actually making higher lows. So this is a situation where the market is suggesting that price is actually stronger than what price is leading you to believe. Again, I have no idea what's going to happen here. I just don't know. Nobody does. But I actually have a framework to work within. I'm in okay trade location. Maybe a little bit expensive, but nonetheless, mountain man level. I have a situation where the market was oversold and is starting to come out of that oversoldness, and I have indicator confirmation that this market is actually price-wise is stronger than what price would lead you to believe. And notice here on the volume indicator, unlike the Ethereum, Litecoin actually has held its recent lows here. I think that held that low. What is that? That's 16728. 166. Ooh, so it didn't. A little bit hasty there in making that comment. Slightly lower. Yeah, okay. Oh, it is lower. Yeah, there. But I do like how I see this cute little W trying to come in on my volume indicator. And you can see the volume bars are trying to perk up here. What I ideally want to see out of my volume impetus, right, is I want to see higher lows and higher lows out of the volume bars. I think we actually get this W confirm if we can get this volume to ramp up. It looks like somewhere around there, right? So you've got sort of down, up, didn't really get any down here. I think like Ethereum, it's close. But if we get a nice big green volume bar here, then I think that does push the OBV into Wing out here. And I think we can make the argument that volume is coming in. Still a little bit early though. I think this is an L Tangonator. We've got Williams percentage R oversold. We've got the price momentum push with divergence off MACD. And like we showed you on the Ethereum, unlike Ethereum though, this W has actually confirmed. Now, maybe if we look at Ethereum on different exchanges, it might have confirmed the W. But hopefully everybody can see here, we went down, then we went up, then we came back down. We did not break to new lows, and then we turned back up and we went through this high. That high there is $71 even. So, I think you can make the argument that there is a setup here. And I tweeted this out yesterday, just basically saying, figures the day that I take my break, the silly market goes and puts in a W off of bull divergence and Willie being stupid. And the same sort of logic, there is that 50% level right into that wick. And of course, if we wanted to check the original breakdown level, that's up in this area right here, right? So put it all together, I actually don't mind a shot on Ethereum or on Litecoin here. What I would say though is I'm a little leery that this is the bottom. So I definitely don't think this is sort of bet the farm kind of scenario. This is nothing more than a trader's got a trade. There's a trade setup sitting there. If I throw on my risk to reward model and I just simply risk to a new low on this W, and like I said earlier, what I want to do is I just want to let whoever put the bottom in this market originally, I just want them to defend this trade. So if I buy that W breakout and I shoot for a 50% retracement, then that produces a nice 3.24 risk reward. Those are the kind of numbers I absolutely love. So I'm pleased to see, it relieves me to no end, that we're finally starting to see things like bull divs in momentum, potential W's in volume. That's encouraging. Williams percentage R really stupidly oversold and starting to come out of that zone. And then finally a nice W in price, where if we get a rally back to the 50% roll, which is nothing more than just WD GAN 101, very natural, very normal technical price action, that produces a better than 3-to-1 risk reward. It's not a bad trade. Not a bad trade at all. So there it is. It's just sitting there. Who knows if this bottom holds, but if you're a trader and you trade L Tangonators, you got to take the setup. I mean, it's just sitting there. Okay, so that gives you sort of an overview of how I would sort of dissect Ethereum and Litecoin. We talked lots about Bitcoin recently. I'll just quickly mention that I still think that we're range bound here. I do like the idea that as we go through this ranging market state, if we can somehow break above these recent downtrends, where the heck is it? right? Not that one. Not that one. There's a whole bunch of stocks. Where the heck? There, I guess this will do. This is Colleen's Coinbase. One high, two highs, three highs, and here we are battling at that trend line again. It's interesting. I remember specifically on public broadcast, I had sort of mused at this point. We hadn't hit the 50% rule, and something just didn't feel right about the market just dumping here. Sure enough, we had to have one more blast off to hit that 50% rule, and then she flaked out. Really, really good lesson, and I tried to convey this to the Twitter audience. And if you're watching on YouTube, it's not a bad idea just to follow good old Brian here. But I had tried to convey to the public audience, for heaven's sakes, don't take a trade right at a trend line. It is disaster waiting to happen. Think of it this way. Everybody and their brother sees this same trend line. Now, if you were a higher up, if you were 1%, if you're trying to screw over the public, if you're trying to, take their money, are you going to play around with pricing here to see if you can screw the public over? Because remember, everybody, probably I would say over 100 million people were watching this same trend line. And the rule we have at TRI, it's one of our setups, is you cannot take a trade right at this trend line. If you do, you're just asking for trouble. And I'm trying, you guys seem to think that I sit there and I just spout this rhetoric because I've never traded this stuff before. The reason why I learned this lesson is because I made this mistake a million times. Don't take the trade at the trend line. You're going to get your ass kicked. And that's exactly what they did here. They just kicked everybody's butt. I would make the argument that you want to let the trend line be broken, kind of like here. People went, oh, trend line break, we're going higher. And they get their butts kicked. Let the trend line be broken and then hunt for a W on the other side of this trend line. That's the key. I was on the site. I don't know which one it is. Somewhere around here. Maybe it's gone now. Nope, I don't see it. Anyway, I drew up a cute little what does an FU move look like here? And it's actually a bit shocking how it's played out. But I was saying I wanted to see a dump, and then I want to see a W. And if that happens, I can buy. And as you can see, we got the rally, the dump. And you can see right now they're going through the process of, is this thing actually going to W? And if it does, then I actually think that this thing could start rocking and rolling. And if that's the case, then that actually supports what we're seeing out of Litecoin and out of Ethereum. We're starting to get sort of anecdotal evidence. And I do believe that for the broader crypto market to rally, Bitcoin's got to be happy. The popular kids, stay away from them. I mean, the worst part about this, somebody says on YouTube, I should probably just avoid the popular kids. Ironically enough, like I used to work with floor traders, and they would say, you know what the right trade is? The right trade is the uncomfortable trade. The right trade is the difficult trade. It's shorting against the highs when everybody's screaming breakout. It's buying against the lows when everybody is saying breakdown. Ironically enough, usually the better trade is to take the trade that's actually contrary to the herd, and it sucks, but that's get used to it.
In relation to that, there's a term my wife uses that I really like. She says, for a lot of these things, you have to lean into discomfort.
Yeah, that's a good way to look at it. Yep, lean into. Yeah, I like that. And actually, I've been blabbing away forever here, so that's actually probably a good segue, Graham. I'll just finish up this just very quickly. If this breakout does happen, I think the breakout has to look something along the lines of, what the hell did I do with the damn chart now? I hope I didn't lose it. I even tweeted it out, but maybe I lost it. Yeah. So, if, this was that trend line, right? We were starting to work our way higher. Then you go down, you look at your indicators on this move higher. Is this move for real? Notice the OBV. It wasn't like there was a big storm of new buyers that were coming in here. Warning, moving to new highs, OBV not moving to new highs. MACD, our raw oomph, right? Market's moving to new highs. MACD is not moving to new highs. And then Julian, one of our site principals, he loves his RSI study. Same logic here. Market was working its way up. We were nowhere near those old highs. That's another sign of divergence. So we have not only volume divergence, but we also have price momentum divergence 2 different ways. And we could probably also throw on Willie and gee whiz. Willie did go stupid right on this candle right here. Willie said, you're too late to be a buyer. Don't buy it. You might be stupid. And kaboosh. Now, the interesting thing about this, guys, is that did you notice that this happened late on a Friday afternoon? And this happened late on a Friday afternoon. I got a funny feeling there's something bigger going on here. It might have to do with these CME boys. Tough to say. You notice that after that big dump event, the market slowly consolidated. Hopefully you see the W's. This was a 38.2 tag, and boom, that set up this next rally. And here we are again. Market dumped. We've rallied away from it. We've come back down against it. And here comes Brian's potential W that he's looking for. If we can W out here and rock up higher, hold these lows, then that's the W I'm looking for on the other side of this trend line. I can't find it. Oh, well. Okay, I think I'm going to leave the sort of rhetoric about the market at that for today. I hope you enjoyed the sort of walkthrough. I've completely lost my chart now. Oh, actually, I think it was over here. Yeah. So, here is that W. If we can hold these lows and get our butt back up above these highs, then I think we can actually start thinking about things like AB equals CDs. And I might even start hunting things like bullish bots, right? Where I go AB and then clone that, CD, to take us up into sort of the 11,600 area or back up against these highs. So keep your eyes peeled. You can see the divs. Not really a lot of volume there. That's, again, another little warning sign that's bothersome to me. But we do have this little bull div. Unfortunately, this almost looks like a wedge. Usually what ends up happening with these wedges, and I said I was going to stop talking, so why are you still talking, Brian? Anyway, I'll finish off with this. Usually what I see happen with these MACD wedges is we'll do some sort of big blow off top, might even go up nice and higher, and then we come crashing down the other side. So maybe if we're really lucky, this resolves bull, we blast up through the top here, and then we have to come back down and visit the trend line from the other side. But we'll see what happens. That will be for next week's episode. Right now, for the next week or so, I'd really concentrate on whether this thing's going to W out here. And if it does, then I think we got the case for a nice bull. The last thing that I'll say, and I swear I won't say anything more after this. Just be cognizant of the fact that there are bearish setups that actually are potentially forming here. Now what did I do with the damn chart? Thought I had it on here. So just be aware that, damn it. Well, I'll go one more time. Let's see, is it there? There it is. Hey, good. Phew. If, this is that W on the other side of that trend line. if we W here, like I said, we can start thinking about things like bullish bots and stuff, right? If we make 3 higher lows, then away we go. But at the same time, too, this is definitely a potential bearish situation. If we start actually Ming out here and lose this level, then we could be in for some trouble. So just be cognizant of this. This battle zone on Bitcoin right now, it's about roughly 10,000 up to, let's call it maybe 10,500, 10,600. This is off of XBT on Kraken. This is a really important battle zone here. And if we lose these lows, we can't W out here, then I think we're in for some trouble ahead. So just be aware of that. Okay, Brian, stop talking. We do have, to finish off today, we do have a fun event in that our new school term is starting up. And for the past week or two, we've been sort of promoting this contest for a seat in the school program. And like I said, we have Grim that's on the call with us. And he is the official level 1 instructor. I've pre-recorded all of the video lectures. They're about 2 to 3 hours. There's about 11 of them or so. And then Grim comes on once a week with the students and does a group tutorial session, and sometimes if I have time I'll pop in and participate in the call, but Grim's really driving the bus there, and I think he does an absolutely fantastic job, and he sort of helps with the Q&A of all the students to make sure that all the sort of concepts are clear, and sort of interacting with TRI management. So you heard Grim just talking a little bit earlier. As well, I introduced Kevin, and Kevin was the one who aggregated all the names. And we used to have fun on, we used to do shows on Coinigy. And we used to sort of ask what coin do you want us to look at this week? And people would put down the coins that they were interested in, and we used to create a wheel. So as you can see, these are all the people that put their name down for the contest. Pretty big list, I gotta say. I'm not quite sure how we should do this. Kevin or Graham, do you have any suggestions on how we should do this?
I don't know. I think if we just hit the wheel, give it a little announce. The thing I want people to realize is we are beginning the course. The first week is kind of orientation. So if you don't win this, you can still get in on the course, and you can still, purchase a slot in it, and you won't be under the gun. You'll still be able to keep along just fine. So
yeah, good point. And we do have several different people that I think are coming in through the week. The first official class for the level 1 program will be actually 1 week from today, the 15th. And as Grim said, this is sort of like orientation week. And we actually spend the first week just simply going through, look, you need to get set up with, and to make these YouTube videos work the best, you really should have like a Gmail address. You can just go create one just for the purposes of this course and never use it again. It's fine by us. But, everything is private that Grim does. So we have to sort of make sure that everybody can access the YouTube videos privately. You're going to need to have a whole bunch of tools in place, things like word processor documents. Google Sheets is a great resource for that. Again, we can interact and use it online. For building your trading plan, you're going to need a spreadsheet document program. Again, Google Sheets works great for that as well. To track what you're actually doing in the market, what you're seeing, practicing actually this whole concept called the process and vetting setups. You're going to need a word processor document to start building out your journal. The first week of the program is a great opportunity to just do what we call verbal diarrhea. Just get out all the baggage that you bring to TRI, all the horrible mistakes that you've done in the past, all the people that have screwed you over because they were just, immoral capitalists, right? And just get that out, right? So the first week of the program is all about just, okay, we're going to hit the reset button. This is what we need to succeed at this program. So excellent point there, Graham. Don't feel as though if you miss today, you're SOL. The whole first week of the program is orientation, and we have people coming in throughout the week. That's very normal. And Dav, I'm not quite sure where you got the message that today's first class was on the 8th. This is actually when we're starting this sort of intake, and our first official class session is this Sunday the 15th.
Yeah. Also, Brian mentions, that we use Google Docs and Google Sheets. Don't feel like you need to be at all versed in working spreadsheets. We have lots and lots of students that come through that don't have any computer technical knowledge. That's totally fine. We'll provide you with the templates and everything you need for those. So.
Oh God, this Grim guy's awesome. Thank you, sir.
We get a lot of people that when they first come on, they're really worried about that. Don't worry about that. This is we're very handholdy. We're going to walk you through a lot of this, and B, it's a lot less computer technical than it appears on the surface. So
yeah, good point, sir. And then also, lastly, we should probably also dovetail this. You don't need to be spending any money on site subscriptions to things like TradingView now. You can use all their free tools. The great part about crypto on TradingView is it's real time. You don't have to pay for any sort of data feeds or anything like that. You should be able to do the entire course off of the free platforms. So, okay, without further ado, somebody got a drum roll? Kevin, you got like a drum roll sound or something?
I can probably find something.
Well, I'll just do it on my desk. Here we go. Oh, that sounded terrible. Somebody's going to do that. Anyway, without further ado, as you can see, there's a whole bunch of people on the wheel. I have absolutely no control over this. Whoever wins, congratulations. If you do watch this afterward and you did win, then make sure to chime in. DM me on Twitter. Come on the site. Hey, I'm the winner. We'll get you all set up. Come on the YouTube page, whatever. We'll try and reach out to you. We didn't collect anybody's emails or anything here, so all we're going off of is your screen names. I mean, Bill, it's going to be hard for me to chase you down. There's probably a few other Bills in the world. So, but here we go. All right, so good luck to everybody. And the winner of the Q4 2019 TRI Level 1 raffle is... Peter Sachs! Way to go, Peter! Actually, he's on the call here, too. You won, Peter!
Congrats, man.
Way to go. Not fixed. Totally random. I didn't touch a thing. Way to go, Peter. You won! So, either reach out to me on the site or through Twitter or through YouTube, but we got to get you now registered and good to go on the site. Yeah, way to go, man. You did it. Congratulations. And all the rest of you, keep in mind, the cost of this education program is actually extremely low. I used to know guys that would charge easily 3, 4, 5 times what we charge for the program, guys that I used to work with on CME. So, if you didn't win, maybe consider making an investment in yourself. And I as plenty of people will tell you, I definitely think it's worth the money. So, okay, everybody, I think we'll leave the broadcast at that. I got to go get pretty for the boy and give him an awesome afternoon. Peter, make sure to reach out to TRI people and let's get you set up on the site. Have yourselves a great day, everybody. I hope you got some value out of this broadcast. All the best. And the only thing left for good old Brian to say at this point is a big bye for now.